Good morning, welcome to this weekly market update from MRC Markets. Today is the 12th of July 2012. What we'll be doing today is just going through the charts, reviewing what kind of happened last week and what we're already seeing this week as it's Thursday. And just going through the charts based on weekly sort of weekly bias, daily, look at 4 hour and 1 hour as well, and see what I think will happen for the rest of the week, and just show you what I think you should be looking out for on your charts in terms of technical analysis. So we won't make any trade calls recommendations in this video. You trade at your own risk. If you could please read our full disclaimer on our website, www.mrcmarkets.com. For any new followers, we do have 3 moving averages in each of these charts. The red one is a 55 simple moving average, the purple is 100 simple moving average, and the gold is a 200 simple moving average. The charts I'll look through today are Euro dollar, cable, dollar Swiss, Aussie dollar, and gold. Okay, and so this is the Euro dollar chart. You can look at, first of all, let's just look at last week's candle. You can see last week's candle, a huge bearish engulfing candle. So the first thing you should think this week is, the odds are for a further sell-off, really. Some people say, oh yeah, you could look for you might get some sort of bounce or some sort of retracement, but you just got to think bearish engulfing candles are very, very strong candles, and especially on this euro. We're now at new 2012 lows. So the odds are that we're going to be testing these 2010 lows that you can see to your left of your chart here. Those lows stand at around the one spot 1870s level, so that'll be the next sort of target in terms of the weekly chart. That's the only thing I've got of real interest. You can see we're still miles away from moving averages, and there's nothing, in terms of fib plays, there's nothing much of interest. So in terms of the weekly, it's all about those 2010 lows if we get there, which is looking very, very likely at the minute. We're already starting to sell off in this weekly candle quite a bit, so it's looking very, very ugly in terms of this this euro dollar chart. If we narrow down the time frames, flip it to this 1 hour chart. A lot of people talk about this trendline resistance that's been playing out quite well over the sort of last couple of weeks. That's one to keep on your charts. See if you get any sort of bounce up on that trendline, then a lot of sellers will be coming in. We also have the 55 bar moving average there as well, but it's literally it's kind of just a sell into any sort of rally play at the minute, unless we get any sort of break of that trend line. This is the 4 hour chart. You could look at the obvious fib would be from the sort of recent highs here down to lows, but this is if we bottom, so it's not a huge point in drawing a fib because we could just slide down either further. But the best thing to do is if we get any sort of solid bottom and solid in some sort of reversal candle, if we get any pop up, then draw the fibs on your charts to look at any sort of selling strength. But no, it's looking very, very bearish, this euro dollar chart. Nothing much of interest really in terms of what I think will happen in terms of any of the technicals. It's just looking bearish on every sort of time frame, really. Let's have a look at the cable weekly chart. In terms of the weekly, we've spoken about this before. This uptrend is still in play. It is starting to look heavy, but it is still technically in play, so have to keep that in mind. Last week's weekly candle was also quite bearish as well. It was a bearish engulfed the previous candle, so look like we want to sell off down here and come down to this trend line support on the weekly. That's the real interest I have on this weekly chart. If we flip it to the daily, what do we have? This fib is still in, I think we spoke about this last one, I'm not sure. We must have done because it was start of 4th of July. The 61.8, we're pretty much testing it as we speak. Actually, that held kind of previously, but it is still looking heavy. You can see it tried to get above this 50% level and couldn't. So in terms of if you're looking to get in any sort of buying opportunity, or you're looking for some buying strength, then ideally you want to see some strength above that 50% retracement, because we've got a nice bullish candle and then we held below that 50% level. So in terms of the bulls, they want to see price get above that 1.5522 level, then come up, and then they'll have to deal with the 55-day moving average and then 200-day moving average. You can see last week the 200-day held very nicely. We spoke about that before. from this this previous fib here from highs to lows. We said that the best thing to look out for any sort of bounce off the 50% retracement of the 200-day moving average, and surprise, surprise, we got a nice bounce off the 200-day moving average, and we're starting to sell off. So the bears are looking for a break of one spot 52.67. That would most probably be their main sort of target. Is the 0% line, which is that level there. But of course, you'll need to get through this trend line support, which has been holding since start of 2009, really. So a solid trend line it will need to break there. But that's the only real interest I have in terms of this chart. I mean, over the next sort of few days, the plays that you could have, the technicals that you could be looking at, the only one I'd have real interest of is this fib here. That 61.8 is still holding. Yeah, that's the main sort of zone of interest rate. I mean, you can see if you flip it to the 1 hour chart, you can also see these moving averages work so well. I remember a lot of people talking about this yesterday, I think, on Twitter. This 100 hour moving average, look how well that held there. That's why you've got to use these in all time frames. The 1 hour chart's a very popular chart. Great moving average which held there. So if you do get any pop up from the 61.8, then have a look at that 1 hour 100 hour moving average to see what happens there. Dollar Swiss chart, in terms of the weekly, nothing huge of interest, although we have now broken above this 100 week moving average which held previously there. So the next target would be this 200 week moving average, which stands at 1.0073. In terms of daily minutes, literally just flying this chart, absolutely flying. We spoke about this fib here before, from lows to highs there. We've got a nice bounce of the 50%. So the next sort of target that people will be looking at for the buyers is the 123.6 extension at 0.9935. In terms of any sort of shorter term bounce, if we get one, then it's all about the 0%, which is the previous highs, to get any sort of see if we get any sort of bounce off of that. And also you got this is the 1 hour chart, you got the 55 hour moving averages there. But in terms of levels, the 0.9770 will be the main zone of support if we get any sell off on dollar Swiss. In terms of the Aussie weekly chart, still in a nice solid uptrend really. We've got a nice bounce off of key level here, which is 96.32. We've spoken about that before on these webinars. In terms of the shorter term perspective, the fib, no, it wasn't a fib there, what am I looking at? A fib that is of interest at the minute, which is the price is pretty much sitting right on top of it at the minute, is this 50% level on the 4 hour from that recent swing low. You can also draw a trend line to make it quite easy to see. Actually, no, it's not much of interest. It's actually broken, that trend line. If you draw that there, the original trend line there is actually broken, so the fib is now looking to hold. That's at 1.0147, so that'll be a level that a lot of people will be playing. But it looks like it kind of wants a healthier retracement than that. I mean, if you look at longer term perspective, this weekly kind of trend line, you will not be surprised to see if it wants to come down to that trend line. But I mean, if you flip it, look at the 4 hour, if you get a nice sort of reversal there, it could be a nice buying opportunity. But you can see it's been held on this 4 hour chart by this 100 bar moving average. Previously acted as very nice support around these areas here, and now we've got below it. It's now acted as resistance to the pip really. So in terms of the 4 hour chart, it's a very nice chart on this Aussie dollar, the chart that I'd be looking out for personally. But if we get looking for any sort of bias towards the upside, then we need to get above that 100 bar moving average on Aussie dollar. Gold weekly chart, same story really. It's all that we've spoken about many times before. I'll just sticking up this support line for you. All about these 15. I know what level was it? Yeah, the 1560s. That's the level we're talking about on the weekly. We haven't got a weekly candlestick closed below that in a long time, and that level was still holding. In terms of last week's weekly candle, it was a reversal. I mean, it's just been very choppy really. The last sort of 8 weeks, very choppy price actually. I mean, we had this candle here, this lovely hammer. A lot of people thought we would get a nice bounce up, and we did initially get a bounce, and then it just got held out to 1620. So it's just a real chop range in terms of the weekly chart. And the last sort of 1, 2, 3, 4, yeah, pretty much 8 weeks, just been chopping between this 1560s and 1620s range. Last week's candle was a reversal candle, and you can already see that this week we're starting to sell off somehow. So it's all depending on how it reacts to this 1560s, if we're going to get any reversals really. I mean, if you flip it to the daily, nothing much of interest apart from that we're making higher lows. Then you could also say that we're making lower highs as well. So very, very choppy. Best thing to do is just look for a breakout really. You can just remember those levels, and just, if you want to keep it a bit tidier, just keep those levels in your chart. You also see this 100-day moving average holding very nice sort of confluence with that trendline resistance as well. But you can also see this 55-day moving average has been acting as very, very good support and resistance as well. So if we're going to get any momentum to the upside, then we need to get a daily close above this 55-day, and then a breakout of this sort of symmetrical triangle here above this 100-day moving average and trendline resistance. Then that next first line of resistance will be that 200-day moving average at 1651. Okay, that's all for the charts. Let's have a look at the Forex calendar. What do we have for the rest of the day? It's Thursday today, so the rest of the day we have the weekly jobless claims as a highlight for the rest of the day. Forecast at 376,000, previously was 374,000. We have China GDP overnight, very important in terms of risk appetite. So anyone who trades Aussie dollar, be looking for a good. If you're long, you want to be looking for a good Chinese GDP number there, because that has a very good correlation with the risk appetite. And the headline out of the Eurozone, we have a big Italian 10-year bond auction. Not sure of what time that is though. And then tomorrow at the US we have US PPI at 1:30 GMT, and to finish the week we have preliminary University of Michigan consumer sentiment data. This week's been very quiet in terms of data really. Nothing much. We had the FOMC last night, but that was quite quiet. Not good for the QE wishes really. Nothing much out of the FOMC last night, but no, it's been a generally quiet week, a generally choppy week, as you can see from those charts. I mean, if we flip it back on, if we flip it back onto that euro dollar chart, you can see it's pretty much been choppy throughout the week really. So yeah, very, very choppy, very quiet. We're looking for some sort of, euro dollar's pretty much just been just sliding down gradually all week. So that has been a very quiet week indeed. Nothing hugely of interest, no massive breakouts. But you never know, the next couple of days we could get a big breakout. So just got to keep an eye on the charts. And yeah, stay safe. Enjoy your week trading. Hope you enjoyed this video. We'll catch you next week. Thanks for listening.